So you want to pay less in taxes, do you? Paying less in taxes is actually quite simple. To pay less in taxes, all you have to do is completely stop working and make no money, because the less money you make, the less money you have to pay. That's right, you can just stick it to the man, say, hey, forget taxes, I don't want to pay any, I'm not going to work, so I'm going to have zero income and no taxes. Obviously, it's always better to make more money. Now, I agree it's not always better to pay more taxes, but it is always better to make more money. Nobody's going to want to have zero income just to avoid taxes. So let's talk about ways legally that we can reduce our taxes. Also, don't fall into the misconception that making more money that might bump you into a higher tax bracket is bad. Because, like I said before, making more money is always a good thing, even if it bumps you into a higher tax bracket, because you are only taxed at that higher rate on the margin that's above that threshold. So if you want to learn more about that, I have a whole nother video on it. I'll put it in the cards and also in the description. All right, so let's break it down. Let's talk about things that you can do to actually decrease your taxable income by not decreasing your actual income. So two different definitions. So there is the income that you have, which you are probably thinking the cash that I receive from working, right? The money that I get, the income that I have. And then you have a thing called taxable income. And the IRS has set all these crazy rules of what is taxable income and what is not taxable income. So our goal is to have high income, but a lower taxable income, or at least as low of a taxable income as legally possible. Yeah, that's right. I'm a CPA. I love lowering taxes. I like to pay the least amount of taxes that I possibly can, all while still following the law, of course. All right, so tip number 1 is to gently tap the like button and then participate in your company's 401k. So if you work for a business that offers a 401k, it is a good idea to contribute into that 401k, because when you contribute money into that 401k, the IRS is saying, hey, any money that you put into there, we're going to reduce your actual income, and then that is what your taxable income will be. So, for example, if you make $50,000, but you pay $2,000 into a 401k, the IRS is going to say, awesome, you made $48,000 this year. And that means you're only taxed on that $48,000 instead of the full $50,000. To be able to participate in this, like I said, you have to work for a business that offers one. So if your business does offer one, I definitely recommend contributing to your 401k. And there are limits on how much you can contribute into your 401k. In 2020, that limit is $19,500. So for a quick example on how much taxes you could actually save, if you made $80,000 in a year and you are filing as an individual, that puts you into a 22% tax bracket. If you ended up contributing the entire $19,500 limit, take that times 22% and you'll save over $4,000 in taxes. So when I worked for a CPA firm, I actually audited 401k plans for businesses, and almost every single business that I audited had a matching plan. So that means they would match your contributions up to a certain limit. So they might say, hey, we'll give 50% of anything that you give up to a max of an additional 2%. So they'll say, hey, if you gave 1%, we'll give 0.5%. If you gave 2%, we'll put an additional 1%. So my goal at least was to always max out my 401k to the point where I took advantage of that match that the employer offered. And that would be my suggestion to you. If you cannot contribute that full max, at least contribute to the point where you are getting the entire match that your employer is giving you. Otherwise, you're just leaving money on the table. There is one rule around 401ks that you have to be aware of. Any money that you do contribute into there is locked into that 401k, and you are not going to be able to access it until you reach retirement age without a penalty. So if you actually wanted to go and pull money out of it, you would have to take the tax on it, but you would also be charged a tax penalty on it. So it is money that is locked up until retirement. All right, for all those people who do not have a 401k or have employers that offer a 401k, there is a thing called an IRA. That is an individual retirement account, and it functions very similar to a 401k. So you can contribute into it, and there is an IRS limit on this as well. And in 2020, that is $6,000. But the cool thing is if you are married, then that amount doubles. So it'd be 6,000 times 2. So you'd have $12,000 that you can contribute into an IRA. And that also reduces your taxable income just like a 401k does. Now, if you do work for an employer that has a 401k and you are taking advantage of that, then it also reduces the amount that you could put in for an IRA. So you wouldn't be able to max out a 401k and then in turn also max out an IRA, because the IRS obviously wants to have you pay as much taxes as possible, so they don't let you take both of those things. They only allow you to take one of them, and so make sure if you do have a 401k, do some planning, make sure you understand the rule before you go and max out an IRA. All right, now on to one of my favorites. This is tip number 3, a health savings account. This one also has a limit. For an individual, it's $3,550. For a married couple, it is $7,100, so just twice as much as the individual rate. This is similar to a 401k and an IRA in the fact that they are locked up, but there is one caveat to that. You can use funds from this account to be able to pay for medical expenses. I love this one because I am a young dad. I have 3 little kids and accidents happen, and I know accidents are going to happen. I'm sure I will be in the doctor's office for broken bones, because I actually have already been in the doctor's office for broken bones for little kids. So I know I'll be able to use this money for medical expenses. So I always max out my HSA because I know I'll end up using it on medical expenses. But it also reduces my taxable income by $7,100 because I max it out and I am married. So I max it out, it reduces my income. I am able to still use it for medical expenses. I don't use it all the time, so the balance just keeps growing and I'm able to invest that account. And the cool thing is once I reach retirement age, I can still use it for medical expenses, but I can also pull on it just like I can a 401k or an IRA, and I will have that as a retirement account. And at that point, I do it penalty-free, and it doesn't have to be on a medical expense. All right, tip number 4 for saving money on taxes is honestly starting a business. So starting a business allows you the opportunity to write a lot of things off. So for me, I have multiple rental houses. I had a trailer that I was renting out and I took tax deductions on that as well. So starting a business and taking advantage of those tax write-offs is big. So I love real estate for that fact, because I can buy a house and I could rent it out, and so it can be generating cash for me, but then I also get depreciation on a very large asset, and so my income is actually reduced by it because the depreciation that I take offsets my rent, and so my return is even greater off of those investments. So I love that aspect of having a rental property. Those are my 4 tips for saving money on taxes that anybody can do. If you have a 401k, take advantage of it, contribute to that. If you don't, open up an IRA, contribute to that. It'll reduce your taxable income. Health savings account, they're awesome. You can use them for medical expenses while also reducing your taxes. And then start a business. Find something that you love. Have a side gig that you can do, and you'll be able to write off some things. Like if you have a home office, you can actually take depreciation on your own house and write off the portion of your house that is purely used for business. So take advantage of those tax opportunities, reduce your taxable income as much as legally possible, and y'all have a great day.